What's going on, believers? Happy motherfucking Sunday. I'll be doing a weekly market review and outlook now. Time is currently 5:24 Eastern. Want you to take a minute and read over the risk disclaimer as always, and I will jump into the economic calendar. So I've mentioned that I'm going to start to utilize a investing.com economic calendar as well. Today I actually have a reason to show why it may be significant. And so if you pay attention to this, right, Sunday, June 25th, 8:15 USD, FOMC member Williams speaks. Forex Factory, and I'll just refresh it, right, is not showing that. So while the visuals are definitely more user friendly in my opinion, as far as just how simple it is to track what's going on with my eyes, like okay, they got the date in the column, and then they got the time, right? Then the currency, the color of the folder for impact, and then the event itself, and then these little folders to be opened up for more details, and then all of the numbers and such on the right side. So very visually pleasing, but as far as I'm concerned, it doesn't have to look the best. I need the fucking information. And so if this is something that investing.com is aware of and Forex Factory is not, then I'm going to be leaning more heavily towards the investing.com. But as far as last week is concerned, or was concerned, the only things I was really focused on were the two interviews that Powell had, one with the Senate, one with the House of Representatives. Those were like the two big big news events of last week. And then, as you all know, the week before that, there was CPI, PPI, and the federal funds rate. So coming into this week, and again, it's much more easy to explain just talking about them as I scroll down here. Like I said, because of the visual pleasing part of it. But so USD, there's no higher median impact as far as Forex Factor is concerned. Monday, there is Tuesday. Fed Chair Powell speaks again on Wednesday. GDP, which is going to be, in my opinion, could be important. Unemployment claims to every Thursday event. And Friday, inflation related news, as well as Friday being the last trading day of the month. So next week, June 3rd, will be the beginning of a new month of trading. So just something I always like to keep in mind. But just to scan the investing.com one. So, of course, the FOMC member speaking tonight. On Monday, they have the 2-year note auction, which is something that I'm also looking more into is the bonds. So this will actually be of significance to me because I can see what type of response is seen in the bond market with this news release on Monday afternoon. Tuesday, we're seeing a little bit more info as far as more news on Tuesday than Forex Factory had. So all the way from 7 up until 3:30, there are sprinkles of U.S. News that could be impacting things within the United States. In particular, looking at Wednesday, these were pretty much the same things here, but more bond information. Oh, and I want to actually read into this Fed bank stress test results. Never heard of that, to be honest. But this is another reason, like I said, I'd rather have more data. I'm not overwhelmed by this. This is more intel for me to be able to utilize to be better at what I do. Consider myself on a trajectory of being professional with this. And so nothing scares me as far as information is concerned. I'm all about using the brain that I was gifted with to analyze the information using the experiences and such that I've been through so far in life. But I'm gonna have to figure out an easier way to go over this calendar for my videos, to be honest. Definitely not as simple as Forex Factory was offering. But let's get to the charts and then let's wrap this up. So what you see here is I have the dollar index chart. On the left side of every asset is going to be the daily, right side is going to be the weekly, and those are going to be the main time frames of focus here. What I will do for each individual, not even each individual thing, what I'll do is the dollar, I'll do Nasdaq, and that's it. And I mean, and now what I'll do when I say that, I'll drop to the hourly chart and do a review, and that's what I'll do now. So just giving you time to look at the daily and the markups and such, and then I'm gonna drop to the hourly over here, and I'll do the adjustments for the new week of trading. So I'm gonna slide this over to here, and then I'm gonna slide this over to here. That's pretty much just right every new day, sliding the daily divider over and any other appropriate levels that need to be. Typically, it's just going to be the week opening price and the individual day divider itself. But so dollar last week, consolidation basically Monday, Tuesday, Wednesday dropped lower, taking the sell side out from Friday last week. That actually was the previous week's low. Trading into this daily inefficiency here, rejecting higher from there, eventually taking out the high of the week on Friday, and essentially creating this weekly fair value gap off the close. So it violated this one, but came right back inside of it and closed. And so basically, where I see prices right now is within this range of this resistance and then this potential support that it's in right now. So how it behaves within this range is going to be indicative to me of what to expect in the U.S. stock indices and foreign currency and gold. What I've noticed is that not always is dollar going to be a complete opposite of what I'm seeing in those markets, but it will typically at least be the opposite of one of those markets. And it seems that Forex is going to be the most likely if there's like a percentage of how often the dollar is the opposite of the particular asset in question. I say that the percentage would be higher for foreign currency like GBP USD, Euro USD, and like Euro and USD JPY. In particular, those are really the main three. Even though Euro USD, I'm not really too interested in. GBP USD and USD JPY will be more heavily traded by me in coming months and years, potentially if Forex is still a thing that makes sense to trade. But yeah, just trying to keep it limited because I'll trade all three of the indices: Nasdaq, SPX, US 30. I'll trade gold, and then I'll add in those two currency pairs: GBP USD, USD JPY. So that gives me a nice six assets to be trading. I think that's enough to have in my basket. I can look at any market and kind of analyze what may or may not happen next, but I'll stick with those six predominantly for my career. Like I said, as long as Forex still makes sense, those Forex pairs will continue to be on that list. But if it ever does cease to be something that makes sense to trade, then I'll probably just drop those, stick with the US stock indices and gold, or potentially replace those with something else later on down the line. But it's not really important. Getting back into the dollar index on the hourly. So another thing to point out, and I can go back up to the daily now. That was pretty much it. Is this daily order block, daily bullish order block? So this down close candle here, the high point of it down to the opening price, that range, and there I want to see if it can act as support. And so actually what I'm going to do is I'm actually going to right? Do that part right there. So that now I have that whole range shaded in. Actually, just want to shade it in black. So now this is pretty much where I have it at, is within this range. And so because there's this uncertainty with up here, I was expecting higher prices. It continued to roll over lower. It's now found some support as far as the range from this low to this high. Found support within the lower half of that range. So I can consider that a discount. So if it does want to find support, fill in this range, for example, maybe even run the buy side above the swing high here. Those are all things that could happen this week, as well as it trading down through this range here and reaching for the bodies of the candles down here. So it could also do that as well, or violate this, right? Get down into the lower end here in these bodies, or fill in this whole inefficiency here on the daily. So to be 100% transparent, I am uncertain about the dollar index for this week. It's the last week of the month. My anticipation for the month of June was a bullish dollar, as is very obvious to see. There was not a bullish dollar. It rarely ran old daily highs. This candle ran an old daily high here. These two candles ran previous day's highs. And then this candle ran previous day's highs. So out of the 20 trading days of most months, only 4 within here so far have taken out a previous day or previous day's highs. Other than that, it will just continue to go lower. And so I won't speak much about July. I'll let this week close, and then I'll get into what I have as far as expectations for July. But for now, I'm gonna move to the Nasdaq real quick. Weekly over here. So with the close of last week, it left a weekly inefficiency, and then there was also this daily inefficiency that I was looking forward to reach last week, and it got really close but failed to get there. I believe the high end of that daily inefficiency is 14964, which is the low of this candle. Well, actually, so it's 14963, which is the low of this candle. It's the inefficiency between this high and this low. So the low of this candle is the high of the inefficiency from the daily. But as far as the weekly is concerned, the weekly inefficiency is going to be the low of this past week. That low was 1 point off from the daily inefficiency. So that low is 14964. But so because it's just 1 point, I've chosen to basically combine the daily and the weekly inefficiencies, because there is such uh in such like the same area that that 1 point difference isn't going to stop me from utilizing the more simple markup approach here, and then just combining the two rather than stacking them and then leaving just for more clutter on the chart. I don't need that. So daily chart, again, not really showing any clear signs of weakness, to be honest. So the theme that I was mentioning was a deep retracement was to be expected any week. Definitely got a decent retracement last week, as far as this was Friday. So Friday began the retracement, and then just straight from Monday slash Tuesday, because of the holiday, lower prices, but pretty much capped out on Thursday with the low. Friday not being able to breach that low. And then since this week, all the indices did open up with a gap higher, as well as gold. Dollar opened up with a gap lower. So there's also characteristics that I'm keeping in mind. But that's the daily. Now, the hourly, as far as how last week moved around. So again, I'm gonna move this here, move this there, bow. So basically right off the open, as you can see, so the opened here, higher first, and then just straight lower. And I was actually hoping to see it get into this hourly inefficiency across the board. Honestly, all the indices I believe had one. Yeah, an hourly inefficiency. I was hoping to see them trade up into it. They never did, and just saw continue continuation lower on all of them for the retracement. And so looking over here as far as Thursday is concerned, although it did not get into that daily inefficiency, it was able to get below Wednesday's low. And this is the Wednesday that the federal funds rate decision was made. And so it got below that low. The sell side that was resting below that, all the buyers that got in thinking this low would be protected, basically went and got them a few different times and then retraced higher into the weekly range before rolling back over Friday and then doing all of this nonsense that I was actually caught myself trying to trade. But this is why I typically will stay away from Fridays. Only thing I really want to see Fridays is a retracement back into the range. And so, for example, right, the week had been lower the whole time, but Thursday had already gave a nice retracement. So to anticipate that same thing or a deeper one on Friday would basically just be looking for a reversal, to be honest, and without it actually getting into that daily inefficiency, not something I was anticipating. So definitely just better for me to have left it alone. And speaking from hindsight here, but so that's that. I do really want to touch on gold really quick. So on the weekly chart, there is this pretty much this combination of there's this liquidity void in between the space of the wicks, so there was zero trading there, and then there's the volume imbalance between the close of this and the open of this, and so it got very close last week, not quite. So 1919.4 is the high end of it. The low of this candle was 1919.5. So got within point 0.1 of that range before rejecting higher. And so I am anticipating some sort of engagement with that level this week. And then how it responds, whether that be to just kind of work that range throughout the week, is kind of giving me vibes to stay away from gold. But alternatively, if it gets up higher first, for example, into this daily inefficiency here, and dollar finds its way higher, I would then be looking to sell gold from this range here down to this range. So that'd be the one scenario as far as gold is concerned that I would be willing to trade this week. Going over to GBP USD. So weekly again here on the right side. So there's that monthly inefficiency. I was looking to see if it would spike up to the halfway point of it and reject, and it has so far. The problem is though, as far as seeing on a daily, there's an inefficiency that is within right now that it needs to break below with some momentum and get below this line here, which could easily act as support, sending it back higher, potentially trying to get above the midpoint and get to the high end of it. Of course, that would be with weakness in dollar. So that would be one scenario as well that I'd be willing to play. If it's able to get back outside of this blue shaded range and dollar is weak, then I would at least be on a short term type trade basis, be looking for a run back up into the halfway point, maybe clearing the highs out. UJ, which is surprising to me, only because I'm not really one to look that deep into interest rate differentials and things like that are involved with forex, but with those thinking caps on, as far as if I'm going to be engaging with the foreign exchange market, what I ideally would have noticed was that not only are the Japanese yen interest rates still negative, but all the other yen pairs were really bullish so far, much more bullish than UJ. But although the dollar showed weakness so far this month, look at the activity in UJ. It was sideways for a while, a couple of weeks in here, and then it broke out of that range, got above the halfway of its own monthly inefficiency that I've been monitoring. So it finally was able to break above that on the weekly chart. And with the weekly close last week, it did leave an inefficiency as well. So definitely still fairly bullish on UJ. And as far as this pink shaded area is concerned, if the dollar is going to find that strength and seek higher prices this week, I will be looking for UJ to venture into the rest of this inefficient area here. So it was a larger range from this low here to this high, but this candle stabbed into it, and then since these past few weeks, it's been essentially working that range. And so this is the last bit of it that's left that it hasn't been trading back up through. So I'll be looking to see if the UJ pair will want to work its way into this range for this week with strength in the dollar. Weakness in the dollar, then we'll for sure be looking to see it work its way back down to this range and potentially the bodies of the candles down here. So those are pretty much the only observations that I can really offer. There's not much by way of certainty, in my opinion. There's a lot of things that did happen over the weekend, things about a submarine, things about civil war in Russia lasted less than a day, and I'm sure all types of other things that I missed just because there's so much going on. But just to wrap this up, I want to shout out the believers, shout out the dreamers, shout out the homies that inspire me to be better each and every day. I appreciate you all more than you know. And I will keep doing what I'm doing as long as you promise to keep doing what you're doing. But I will catch you on the next one. Y'all be safe. Peace.